calendars, we talked about positive theta. This means that they can make money overnight if the stock does not move at all. Price is unchanged for the day. You will make money just by the time decay alone. And I'll show you how that works here in a minute on TOS. Calendars are positive vega. This is one of the main reasons that I like using calendars. That means they have a positive relationship with volatility. And what that means is that if volatility goes up, you make money. Now, on the other hand, if it goes down, it can hurt you. You can lose money. That's why in a low vol environment that we're in right now, is a great time to use these. Now, I use them all the time, 12 months out of the year. Low, medium, high vol, they still work. They're a little tougher in a high volatility environment, but they still work. You have to stay on them a little closer, and you have to adjust them a little more, that type of thing, but they still work. Calendars are debit trades. All that means is we're buying calendars, we're not selling them. So the debit that you pay is all you can lose, no more. There's no margin ever required on a debit trade. And they're very, very versatile trades. We use them a lot for spec trades, directional trades, pinning plays, a lot around earnings. But I want to cover the basics first, the income calendar first, because you really need to have that down and understand how that works before you start getting in the other ones. Most of these other ones are very short, the lit stick of dynamite kind of trades. As you're getting around earnings and directional things like that, you can have a lot of things move around, and they're not so much, well, they're not an income trade, they turn into a spec trade, which acts like every other spec trade. But anyway, we're going to cover the income calendars, the highest probability calendars tonight. Again, why do we want to use calendars? They're good monthly income, very good risk-reward ratio. It's hard to blow these up. Very inexpensive, positive theta, positive vega. Again, one of the great things about it, the debit that you pay for a calendar is all you can lose. It's not like doing a credit spread or a big iron condor, where you have a lot of risk. Here, whatever you pay for, that's the max you can lose. They're non-directional. Again, you don't have to have a theory. It's actually better if you don't have a theory or a feeling, am I bullish, am I bearish? You go into these neutral. Great trade in most market environments. They're really perfect now with a low volatility environment, and it's a low maintenance trade. That's one reason that I really like these as well, because you can put these on, and obviously you can't walk away and don't pay attention to them, but you don't have to, I put you don't mess with it trade. This is not a day trading trade. You put it on, check it one time a day, and you're good to go.